Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar had a roller coaster event on Friday and nearly traded both sides of the range of 68.70 to 69.70 parameters, following new data on the US job markets, which may indicate that the US Fed won't rein in as aggressively on interest rate hikes. The non-farm payrolls increased by 528,000 in July, the Labour Department reported, beating all estimates by double and also the largest increase in 5 months, while in June the numbers were revised up to show payrolls rising by 398,000 instead of the previous report of 372,000 jobs. The unemployment rate also slipped by a tick, that is from 3.6% to 3.5%, equaling the figure back in February 2020, which is also noted as a 50-year low. With a lighter economic calendar this week, I turn this Thursday to the US CPI numbers and see how the market unfolds from there. So we may have a little bit of a quiet week. Nevertheless, the support has been established in the short term for the Australian dollar around 68.70-75, and I do anticipate, as previously seen, a positive or bullish response if tackled. Overall, though, I'm keeping the view that the market should eventually tackle the top side and reach its objective, which will be either at 69.70 and also higher to around 70.5 as the target. The euro also was in a bit of a roller coaster ride, but still holding above the 101.1535 support. It is anticipated that the market should, from there, if challenged, find renewed demand and therefore look back towards that top side. I'm not giving up the hope of this challenge to the top side as of yet, which is around 102.7080. A break there would give further scope up towards 104 figure 30. Dollar yen, well, the market found renewed momentum on Friday and surged through 134.20 40 area and now posts a further threat to the upside, looking towards 136.40 55 as a target. Reassess from there. It was the beginning of the downtrend or the bearish case and may actually find a rejection again from that region. Sterling finding renewed support just in front of that level of 119.50-70 area, with minor support seen at 120.40. Although the level was taken out at 120.60, it still seems that the market will most probably respond to a bullish response from this bottom side of the range. And if we can clear that level of 121.45.55, then it should ignite the move up towards 122 to 124. Having a roller coaster ride as well for gold. As you can see, the market retreated very heavily from that 1,800 area. And from the retreat, it's put a slight dent to the bullish case. And therefore, looking back towards 1,764 as initial target, or might even reach 1,755 before rebounding. Nevertheless, unless we break out that 55 level, the market's most probably going to continue inside this range of 55 to 1,800. I still stand neutral at the moment for when it comes to oil. It reached my objective of $88 a barrel after falling quite heavily from $99 a barrel. I like to put a sort of a sidestep at the moment and just see how the market performs in the next 24 to 48 hours. Coming up with any assessment at the moment is a little bit difficult due to the fact is that the market can turn quite aggressive to the bull case if it finds any fundamental reasons. Nevertheless, at the moment, with the risk that a little bit more down test, 86 might come into play as a support level in the short term. But as I mentioned, I'd rather sit neutral for the time being. Well, that wraps it for the day. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new week.